Is the American housing market finally about to crash? After years of sky-high prices and brutal mortgage rates, millions of buyers are sitting on the sidelines, waiting for prices to collapse like they did back in 2008. But here's the question everyone wants answered in 2026. Is that crash actually coming? Or are buyers just going to keep waiting, and waiting, and waiting? In this video, I'm breaking down exactly what the top experts, economists, and major real estate companies are predicting for the U.S. housing market in 2026. Stick around till the end, because what happens next could affect whether you should buy a home this year or wait. Welcome back to American Property Hub. If you're new here, this is the channel where we break down the U.S. real estate market in simple, easy-to-understand videos every week. If you find this helpful, make sure to subscribe so you don't miss future updates. Now, let's get into what's really happening with the housing market in 2026. Let's start with the big question. Will there be a crash? According to the most recent data, the answer from nearly every major housing expert is the same. No, not a crash like 2008. Here's why. A real housing crash looks like this. Sharp price drops happening everywhere at once. A wave of foreclosures, credit drying up, and desperate sellers racing to offload their homes before prices fall even further. That's exactly what happened in 2008. But that is simply not what's happening in 2026. Most homeowners today have strong equity in their homes and low locked-in mortgage rates from previous years. That means they're not under pressure to sell at a loss. Without a wave of forced sellers, there's no mechanism for a sudden price collapse. Instead, what experts are seeing is something very different. A slow, steady cooling down, not a crash. So, what is happening then? Most major forecasters are using one word to describe 2026: a reset or rebalancing year. Zillow's latest forecast projects national home values to rise only modestly in 2026 TUs, less than 1% for the entire year. That is a massive slowdown compared to the wild double-digit price jumps we saw back in 2021 and 2022. At the same time, existing home sales are expected to increase by around 4 to 5%. As falling mortgage rates and a growing number of new listings finally start to bring supply and demand closer together. J.P. Morgan's research team is forecasting something even flatter. They expect U.S. home prices to essentially stall at 0% growth nationally in 2026. In simple terms, prices aren't crashing, but they're not climbing fast either. It's a market catching its breath after years of extreme highs. Now here's something really important for buyers. Mortgage rates. Throughout 2025, mortgage rates stayed stubbornly high, with 30-year fixed rates hovering above 6%. The good news is that in 2026, rates are expected to ease gradually, with some forecasts suggesting rates could dip closer to 6% or even slightly below at times throughout the year. This matters a lot, because even a small drop in mortgage rates can save the buyers hundreds of dollars per month on a typical home loan. Builders are also stepping in to help. Many home builders are now offering rate buy-downs, where they pay money up front just to lower a buyer's mortgage rate and get their inventory sold faster. So, while home prices aren't dropping dramatically, the actual cost of buying a home is becoming slightly more manageable for many Americans in 2026 compared to the brutal years before it. But, and this is a big but, not every part of the country is experiencing this the same way. This is where it gets interesting for investors and buyers looking for deals. Certain regions, especially parts of the West Coast and the Sun Belt, are actually seeing home prices fall. Why? Because builders went on a construction boom in these areas during the pandemic years, and now there's simply more supply than buyers can absorb. In markets like these, buyers have real negotiating power for the first time in years. Meanwhile, the Midwest and South are telling a completely different story. Falling mortgage rates are unlocking buyer activity in these regions specifically, with steady demand and more balanced inventory. This is exactly why we always say, there is no single national housing market. There are hundreds of local markets, all moving at different speeds. So, should you buy a home in 2026 or wait for a crash that experts say isn't coming? Here's the honest truth. If you keep waiting for a dramatic price collapse, you could be waiting for years, possibly forever. The data simply does not support a 2008-style crash happening anytime soon. The economy remains stable, unemployment is low, and homeowners aren't being forced to sell. Instead of waiting for a crash, smart buyers in 2026 are focusing on something more practical, finding the regions where prices are softening, taking advantage of builder incentives and rate buy-downs, and buying when it makes sense for their own personal financial situation, not based on a guess about where the market is headed. So, to answer the question directly, no, the U.S. housing market is not going to crash in 2026. What we're seeing instead is a gradual rebalancing, slower price growth, slightly easing mortgage rates, and a market that finally feels more normal after years of chaos. Some regions will offer real opportunities for buyers and investors, especially where prices are softening. Others will stay competitive. The key is knowing which market you're actually buying into. In our next video, we're going to break down exactly which U.S. cities are expected to see the biggest price drops in 2026 doors, so you know exactly where to look for the best deals. You don't want to miss that one. If this video helped you understand the 2026 housing market better, hit like and subscribe to American Property Hub for weekly USA real estate updates. Let me know in the comments. Are you planning to buy a home in 2026? Or are you still waiting? I read every comment. See you in the next video.